Here's Johnny. Welcome back. It's the weekend video and falling flat on my face at the start. All right. Welcome back to the weekend video. This is Enda here. I'm going to give you a little rundown on what's happened during the week and where I think this may be going next. Excuse me. Okay, here we go. I'm going to start with the FX market. So this is euro dollar. You can see here people have been complaining that I don't know which chart I'm working on, but here's the euro dollar 1 hour. I should go to the 4 hour first. I have kind of come back to the idea that we're working on. There's a daily chart. I've come back to the idea that we're on a triangle for wave B. I was considering the fact that the idea that wave B was complete at this recent high, whatever that was, 123 something. But I think the action off that high suits a corrective line, to be honest. So 3 waves down, 3 waves up, and then 5 waves down in wave C of D. So it should be another. There should be another long grind sideways in wave B in the euro dollar for probably towards the end of the year. Okay, the 4 hour chart here you can see pretty clear 3 waves down into the weekly low, this week's low, and we had a nice reversal off that. I'm looking at this now as 3 waves down in A, and we're working on 3 waves up in B, and then we should head down again into 5 waves down in D. There is a chance that wave D is already completed this week's low, but I don't. No, I'm not there. I think we need to get lower because if you look at the daily chart, you can see we have kind of an oscillation point in the pattern at about 114, 115. So I think we should get below that, to be honest. The lower trend line here of the this long-term triangle. So you can see here the upper and lower bounds of the triangle suggest somewhere down around 110, maybe as low as 108 for wave D to complete. We'll see how that goes. So somewhere between, let's split the difference. Let's call it 112. I think we should probably hit a low in wave D down around there. So we have another little bit to go on that. Here's the hourly count for euro dollar. You can see that 3 waves down here. I was counting this as a 5 wave pattern lower, and you could still do that in A, but the split seems to be pretty wide there in the center. This would have been a 4th wave previously. But we have an internal 3 waves down here into A, 3 waves up in B, and then 1, 2, 3, 4, triangle 4, 5 down in C. So from that, we're working up in wave B. So we have, sorry, I'm after labeling that at the wrong degree. But anyway, I'll talk and you still get the same thing. It's still the same pattern, but I'm after labeling it wrong. Okay, so ABC down in A, ABC up in B, and then we should head lower into wave C. Okay, if we look at this week's action, it can be broken out into 5 waves. I don't like the initial run up in wave 1 because the 5th wave of wave 1 is very small there. Hence the reason you can probably still label this as 3 waves up. So you could go ABC up in A, ABC down in B, and then 1, 2, 3, 4, 5 up in C. It's a kind of let's say, it's a coin toss on that one, really, to be honest. It still should be followed by 3 waves down in B and then 5 waves up in C. So if it's a zigzag, it's 5, 3, 5. If it's a flat, it's 3, 3, 5. So let's see how that goes. I think wave B should top out around 120 again, and then we head down again. So that kind of brings us up to the previous B wave. 50% retracement then is at 120 again. So this week's action should be kind of dominated by a sideways to slightly upward bias, maybe by about 100 points or so. But it'll be messy, I think. Okay, let's get on from this. That's euro dollar. This is cable or pound dollar 4 hour here. You can see I'm still tracking. Go to the daily count. You can see there's still a triangle going on here in wave 4 instead of a B wave. It's a fourth wave. So we're going down into wave D, and that does suggest somewhere down around 125 complete, which is actually a pretty decent decline. But anywhere from between, let's say, 126.70 to let's say 123 would be the target area. That'd be this extreme low internally within wave C, and down then to the lower trend line. But again, I think the price action will probably continue to contract over the next 6 months or so, as we get wave D and E complete in wave 4, and then we should head lower long term, or more longer term, into wave 5. Okay, let's get into, there's the 4-hour count. You can see wave C top and ABC down in wave D. That does at least suggest the previous fourth wave at about 129. Into the hourly count here, we'll break out wave A and B. Yeah, here's I'm kind of working with two concurrent counts. In the longer term charts, I'm showing wave A and B, and in the shorter term chart, I'm working with a possible alternate as wave A and B, and the main count being a series of 1-2s still fits, and the outcome should be the same, to be quite honest. But let's see how it works out. We've got 1 2 1 2, maybe a 1 2 into Friday's action. So we had a kind of a flatlining of the price action there on Wednesday and Thursday, and then we spiked lower on Friday. So it looks like a triangle traced out within wave 1 in pink here. So we've got wave 1, 2, 3, triangle, wave 4, and then 5. And now we're looking at wave 2 up. So that should be an ABC up in wave 2, and then we should head down in wave 3 of 3 of 3, maybe. The alternate count will still call for a drop into wave C. So that'll still probably bring us down somewhere around 133, I think, to complete. Let's see how it goes. Right, let's move on. Dollar yen, we topped out last week in wave 3, so that rally up off the lows of January brought us up 800 points. So that was the biggest move in dollar yen since last March. Not quite as big as the move, that real V-shaped recovery back, the decline and rally into wave C and D of, again, another triangle. So you can see there's triangles everywhere in the dollar, and I think they will eventually give way to a serious rally in the dollar, and we may have broken ground in this long-term rally in dollar yen this last few weeks. Okay, so you can see the 4-hour chart there shows wave 1 and 2 expanded or extended wave 3, and now we're working on wave 4. In the hourly chart, you can see wave 3 top out there at 110.96. So we had a target there for wave 3 at 110.78. That was the 162% extension of wave 1, and we hit 110.96, and then we've declined pretty rapidly off that. The decline has kind of morphed over the last week. It was, as it's a correction, so it's hard to read anyway. So at the moment, I'm looking at a possible flat wave 4, so flat correction 3, 3, and 5 internal waves. So we've got 3 down in A, 3 up in B, and then 5 waves down in C. We'll see how that plays out. The previous fourth wave shoulder here, you can see bottoms out at about 108.40. So I'd expect 108.40 to probably act as major support for this fourth wave. So we'll probably grind sideways for a while in wave 4, and then we'll head higher into wave 5. The only caveat here would be is if we've got wave 4 already done. I don't think it's got far enough, to be honest. I would like to see somewhere down to take the steam out of the rally. Basically, I'd like to see a kind of a sideways grind and decline back into about 108.40 to complete a 3-wave pattern and then head up. And that should be enough of a respite kind of allow for clearing out of positions and stuff. Okay, before we rally again up into wave 5. So let's see how that goes next week. Here's the stock market. Again, here we are trailing that upper trend line of this ending diagonal pattern, and I have nothing else for you on that other than the fact that I think we are at a significant point. If it turns or not is another thing, but I think it's a significant point in the pattern because we have 3 up in 1, 3 down in 2, 3 up in 3, 3 down in 4, and then 3 up in 5. The price range itself has continued to contract. You can see here off the wave 2 and 4 low, we're contracting. The wave 1 and 3 and 5 high. Well, actually, that's the extreme of wave 1, so that'll be A of 1. We were contracting, so it's still a wedge. It's an upward wedge. There's a lot of overlap happening, and I think this, in my mind, this is done, but we'll see how we play out next week. If we go to the hourly chart, so here's the Dow hourly chart. We have an A, B, C pattern underway in wave 5. So that should be to complete the ending diagonal. We're up against that upper boundary line again, that upper trend line, which forms the extents of the top of the wedge. You can count 5 waves up, but this 5th wave here doesn't look complete yet. I suppose we will hit, let's say, a pretty standard target would be up around the 100% for wave C. I mean, to complete would be at the 100% of wave A. So wave A and C will meet at 34,150. They'll meet in proportion, or in they'll reach 100% of each other at 34,150. So we'll see how this kind of traces out over the next while. Next week should be enough to do this. If it's not done already, next week should be enough to complete this C wave pattern. And we'll see if we get any sort of reaction, maybe off this upper trend line or off the 78.6 fib level, or if we just continue up towards the 100% and then we roll over. Still 3 waves up. Let's see how it goes. The gold seems to have rolled over again into, where are we going? 4-hour gold here. You can see looking for a top and a 4th wave, and then to head down into wave 5 again of C. But this should be the final decline, I think, in this pattern. So we've got an A, B, C pattern, and wave C is tracing out a pretty standard 5 waves. Now we've got 1, 2, 3, sideways flat 4, and then we're heading down again into wave 5. We should see, if we get the trend channel there surrounding the whole lot, we probably have there's a lower end to a lower bound on this next 5th wave decline down around 1600, a minimum target at a break of the previous lows, so a break of 1700 again, or sorry, a break of 1670 again. That'd be the previous 3rd wave low. That'd be the minimum target for wave 5, and we'll see how that works out. So for the moment, we've got 3 waves in a sideways correction, completing wave 4, and we've headed down on Friday. So let's see that hourly chart. We've got A, B, and C in wave 4, and then we spiked lower off after we just broke above 1755. Again, that's the wave A high. We spiked lower. We'll see how that turns out on Monday. There's a chance that this is only wave 4 and we get another 5th wave to complete wave C, but I think the decline there looks pretty impulsive. We'll see that we get a lower high in a 2nd wave and then head lower into a 3rd wave. Can't really confirm this until we get a break of 1676, but I think if we break back below 1700 again, that'll pretty much be a reasonable signal that the larger 5th wave scenario is underway, and there will be a better low to buy gold. Okay, and it'll be a pretty serious opportunity at that point. Okay, here is crude oil 4-hour. I'm not quite sure if the initial first wave down is done just yet. We had contracting price action over the last week or so, the last 10 days maybe. As you can see in the alternate count here, you can see that I've got a 1, 2, 3 into the recent low, and then an A, B, C, D, and E possibility. So that could be wave 4 completing or complete already, and then we head lower into wave 5 of 1 next week. The main count still calls wave 1 and 2 complete, and we're heading lower in a series of 1-2s to begin wave 3 down. If we get a break below 58 again, that'll confirm that at least the alternate triangle is done. It'll also signal that wave 3 of 3 is underway. So let's see how that goes next week. Significant downside if it's a third of a third wave. There's significant downside ahead in this pattern. We got to hold this interim high here at let's say we got to hold below $60 again. Well, at the upper end 60.50, I'd say, and we got to head lower on Monday. Okay, here is the S&P. You can see a nice wedge pattern again here in the S&P. Move these up to get out of the way. We've got 3 waves up in 1, 3 waves in 2, 3 waves in 3, 3 and 4, and then 3 and 5. Again, the contracting wedge. We seem to have topped out again in momentum. The RSI has kept lower highs along the way. Fifth wave has come up to meet the upper trend line again. Let's get into the hourly pattern and see here what is actually happening. You can see here wave A, B, and C. Well, wave A, 3 down in B, and then 5 up in C. So it's a flat pattern, wave 5 of the triangle. So, diagonal. So the final fifth wave in the diagonal should be a three-wave pattern, and we've got that 3-wave pattern here, a zigzag, I think. Actually, 5 up in A, 5 down, or 3 down in B, and then 5 up again in C. Pretty clear 5-wave pattern here. A little triangle there during the week, and then a pop to a new high. Excuse me. On Friday, after hours, we broke out to a new all-time high. Well, throughout the week, we were breaking out to new all-time highs. I think this could be a wedge pattern here, an expanding wedge. Wouldn't that be poetic? An expanding wedge to finish contracting wedge. That'd be good. We'll see if that fifth wave here works out as a wedge pattern on Monday. If it does, then we gotta see a break below this little miniature or minor shoulder here on the left here. So 40.60 again. If we push down below 40.60, that would be an initial hint that maybe the rally in wave C is done. Let's say. Okay, we hit the target. Wave A equals C was 41.20. Let's call it 41.20. We hit that yesterday evening. So let's see if the patterns and the targets come to fruition this time. We will see soon enough. Okay, I'm going to talk about silver. Here we are. I actually changed the count this week to a series of 1-2s off the high. So this is a 4-hour count here. We've got a 1-2, 1-2, 1-2. The reason being was we broke the previous would have been a wave 1, and wave 4 overlapped. So that is a no in terms of the wave structure. So let's get into the hourly chart, and I'll show you how that happened. So we have wave 1 here. You can see the series of 1-2s, 1, 2, 1, 2, 1, 2. Wave 1 came in at 24.80, and then the pattern correction higher in wave 2 this week broke above 24.80. So we have a fouling or a disruption of that previous pattern. So now we've got a set of 3 impulse patterns lower without an acceleration down into a third wave yet. So that should be ahead of us this week. Maybe we got a 1-2 off Thursday's high. Let's see if that holds, and we can push to, let's say, at least back down into this declining trend channel again. But I would like to see this would be wave 3 of 3. I'd like to see that push down below $22, I'd say, to complete that leg of the. Let's get a Fibonacci target on it here. A minimum, let's say, at 2270, and if we were to go to the 162% extension, that'd put us down at $20.99, so $21 for between 2270 and $21 for wave 3 of 3 to complete. So let's see how that works out this week. It looks like I'm favoring downside. We've got to see that 2660 level hold and an acceleration begin down into a third wave. Okay, that's it, done. Excuse me, I've done the 8 markets that I cover every night. If you're interested in that, go over to the website and check out the membership levels. To all you members, thank you so much again. God bless you. And we will see you on Monday night. To everybody else, I'll see you next Friday, or maybe I'll do a video during the week. We'll see how that goes. Everything's up in the air. I'm only promised today. I'm not promised tomorrow or the rest of next week. So we'll see how it goes. God bless you all. Be good and be good. All right. God bless. Shalom. Bye-bye.